Welcome everyone to the first in a series of conversations around entrepreneurship and how to be a better business. My name is Donnie and I've been in business for a few years. My business works with a lot of small businesses and helping them from a technical perspective. One of my biggest problems has always been around finance. I've been horrible at it. And it's taken a lot of years to try and learn more about how to run my business and make it a profitable business. So today, to help with that, we're going to have a conversation with Ted Wainman, who is an expert finance person. And Ted and I have known each other for a lot of years. He's written books on the topic. He gives business training. And he is my go-to person for financial advice and anything that has to do with money. So Ted, do you want to give a little introduction?
Yeah, hi Donnie. So great to see you again. You're looking very well, which is fantastic. So here we are, January 2021. So happy New Year to you, Donnie. Happy New Year to all of our watchers. So my name's Ted. As Donnie said, my background, I spent 6 years at Ernst & Young, where I trained and qualified as a chartered accountant. I then spent 6 years at a small bank called JP Morgan. You may have heard of them, where I worked on the investment management side and did an MBA. Since 2003, though, I've been designing, developing and delivering training workshops. In that time, I've worked with over 300 companies in more than 35 different countries around the world. And I specialize in financial analysis, reading financial fluency, reading financial information, as well as strategy and communications. So, Donnie, all of the problems you experience, all of the heartache, all of the pain that you have, you're not alone. There are literally hundreds of thousands, millions of people out there who are going through exactly the pain that you're going through. And so what we're going to try and do during these workshops is kind of lift the lid on this murky world of finance and really find out, get through all the kind of the mumbo jumbo and find out what are the key things that you need to know as someone who's a small business owner, as an entrepreneur. Maybe you're thinking of starting up a new business. Maybe you've recently set up a new business. Maybe you've got a business that's been going for a few years and you're looking to take it to the next level. All of these questions we're going to cover in a series of workshops together.
Perfect. So you started off with it's a new year, so happy new year to you as well. Everyone has their resolution, so we're gonna make a change this year. So the first thing you have to do is, okay, I've made a decision, I'm gonna start a business. So what do you do, Ted? How do you start a business? Do you operate as a sole trader? Do you operate as a limited company? What do you do?
Well, that's a good question, Donnie. So the first question you're asking is, how do I structure myself? And in order to answer that, we're going to be looking at, do I structure myself as a sole trader? Should I be a partnership, or should I actually incorporate as a limited company? So the first question we're going to ask ourselves, Donnie, is, am I trading for profit? So, Donnie, have you ever sold anything on eBay?
Yes, I have.
Okay. Have you ever sold anything for a profit on eBay?
Is that a trick question?
No, it's not.
Yes, I have. Yes,
so maybe somebody gave you a book. You didn't really want it, so you sold it on eBay. You've made a profit. Donnie, did you declare that profit to Her Majesty's Customs and Revenue, HMRC?
I don't want to answer that question.
Okay, so it's okay. They're not coming after you, Donnie. But the point here is that we're not looking at incidental profit. So we all, we have things that we don't need anymore. We sell them. We don't need them anymore. We may make an incidental profit. What we're really looking at is, are you starting to trade, and are you starting to trade for profit? So are you starting to, for example, my next door neighbor, she's recently set up a flower business. Okay. She's going to Covent Garden, she's buying the flowers, she's putting them together, and then she's selling them to people who are doing weddings, who want to sort of decorate their kitchen with them. She's trading for profit. So there's a kind of, it's a bit of a gray area, but once you're kind of making, I guess your turnover is, let's say, more than £1,000 a year, I think, is a guideline for HMRC. Once you're doing that, you're trading for profit. Okay. Now, if you're trading for profit, you're probably, first of all, going to be a sole trader. Okay. So a sole trader is just, it's you or me, for example. We're buying over here, we're selling over here, and hopefully we're selling it at more than we're buying it. So we're actually making a profit. First thing to do is you've got to keep a record of all of your sales and your costs. Very simple. Stick it in a spreadsheet. Make sure you get the dates. Make sure you record all your sales and record all your costs. Try to keep receipts for your costs. If you can, print them out and then write numbers on them. Each, just give them an ordered number. So have a filing system, because if you do start to need an accountant, if you turn up at your accountant, and they're expensive accountants, Donnie, you know that as well as I do. And finance is a simple subject, but we make it complicated, Donnie, in order to justify the fees. So what we're doing is if we turn up at our accountants with a shoebox full of receipts, they're going to charge us to sort them out. Okay. So you don't want to be paying somebody to do something that you can do yourself. So make sure that you keep your sales receipts, and so your sales invoices and your cost receipts, record them in a spreadsheet, and between the two you can effectively work out your profit, and that's what you're going to declare to HMRC on your self-assessment tax return at the end of the year. You can trade under name. You can trade under any name you want, as long as it's unique. So good luck to trading under Coca-Cola, for example. They will come after you, Donnie, if you decide to set yourself up as Coca-Cola. You're probably going to base yourself from home. You might want to just check your mortgage or home insurance small print. Are you covered? Are you explicitly not covered, for example? So are you allowed to do that? And you will need to register for tax purposes. Now, you and I based in the UK, Donnie, so we're talking about this from a UK perspective, but I know that there's going to be lots of people internationally who are watching this. You're going to need to look at your own domestic registration requirements. Certainly here in the UK, you need to register for Class 2 and Class 4 national insurance. And I forget exactly which it is, but I think Class 4, you pay a sort of certain amount every month, and Class 2, you pay on top of your profits. You might want to think about taking out business insurance at this point. And actually, the section on business insurance, we're going to cover it in later, but I'm just going to say that right now, that if you are trading, you're probably going to need some form of insurance. And then don't worry about it, Donnie, just start trading. Okay. So, it's really, really tough. Most businesses fail in the first year. I think it's something like 30% go bust in the first year and 75% go bust in 3 years, for example. So, don't worry too much about anything else. Just get the money coming in, make sure the costs are lower than your sales, and that you declare the profits that you're making. If you get it a bit wrong, if you miss things, don't worry too much about it. So HMRC really want to know that you're recording and that you're being above board. You're not doing cash in hand and sort of acting in the black economy, so to speak.
Yeah.
So there you go, sole trader. Are we good there?
Well, I just have one question there. So who would be a good sole trader? So it'd be like, you're discussing your neighbor selling her, her flower business. Would consultants and stuff like that be?
Absolutely. So a consultant might be a sole trader. So, I'm selling my services. I say to Donnie, I'm going to sell my services to you for, $50,000 a day, which is obviously a bargain, and you'd snap me up at such a cheap price. So if you're selling yourself, you're selling your services, you're buying and selling, you might be making things at home. You might be buying flowers and making wreaths, for example. You might be making homemade jam, anything like that. So anything which it's nice, simple, but it's you, Donnie. It's just you. No one else is involved. You're doing the buying, you're doing the selling. You're not employing anybody. It's just you. Okay. All good.
All good.
Excellent. Okay, so now we come on to thinking about a partnership. Okay, so a partnership is a bit like a sole trader plus. So let's say I've set up a vegetable store. What I'm doing is I'm going to the wholesalers. I'm buying the vegetables, and then I've set up this stall, and here it is. It's Ted's Veg, which is a great name for a vegetable store. And I'm selling them at a profit, and I'm a sole trader. And you say, Ted, this is a great idea. I'm going to bin the IT. I'm coming into business with you. Okay, well, we're now in a partnership. Effectively, we're two sole traders working together. We need to have an agreement, Donnie, on how we're going to split the profits. Because if I'm there at 6 a.m. buying the vegetables and you don't turn up till 10 a.m. because you were snuggled up in your bed and you couldn't get out of bed in time and you don't work without 15 coffees in you, then I'm going to think, hold on a sec, this is not a fair division of the profits. So
Yeah,
we
but
need to come
I've
up
got
on
the
a
looks,
way
Ted.
of
Looks.
you got the looks, you have, absolutely. So we've got to come up on a way we're going to split the profits, and that may be on a level of commitment. So, you know, what you don't want to do is to end up with one of you doing all the work and the other one saying, well, I'm entitled to half of the profits. The great advantage with a partnership, exactly like a sole trader, is your accounts are private. Nobody else can see them, Donnie, okay, apart from HMRC, because you have to declare them. So you can keep your accounts private. You're probably going to need a business bank account at this point. So rather than running it through your bank account or my bank account and finding one of us disappears, we might want a joint bank account. We might as well set up a business bank account, and therefore we have a proper business name. Now, I've put something up there that says LLP, and LLP stands for a Limited Liability Partnership. And I'm going to show you exactly what that means a little bit later on when we talk about a limited company. Okay, but before we get there, Donnie, any questions on a partnership?
No, that makes perfect sense to me.
Okay, that's good. Okay, so we've got a sole trader and we've got two people as a partnership. So when we're thinking about how to set up in business, I could either set up as a sole trader or I could set up as a partnership. In fact, here I've got some young lady. So you're out of the picture now, Donnie, and
Been fired
I've set
already.
up with this young lady. Yeah. Now, what we may find is that actually we're going to set up as a limited company. Now, I think this is a specific decision, Donnie, once you kind of think, I want to do this going forward. You know, this is the business. So some people are going to try things. You know, I'm going to try making jam at home and find I can't sell it. I'm going to try buying stuff on eBay and selling it for a more expensive, but maybe it doesn't work. I'm going to try the flowers. I'm going to try the vegetables. I'm going to try going to the fish market and buying fish early in the morning and selling it to my neighbors. Okay. So sole trader is a really good way of dipping your toe in the market. Does it work? And if you start finding that you're trading and that it's starting to sort of take off and you're thinking, okay, this is it. I'm leaving my day job. You know, this is going to be my proper job, for example. You may want to think about limited liability company. Okay, so here is our limited liability company. Now, the question is, Donnie, what's the difference between us working as a partner, working as a limited liability company? Donnie, what does this word here mean? What does limited mean?
In this context, I have no idea, Ted.
At least you're being honest, Donnie. Okay, so and you know, lots of other people will also suffer from the same. So limited stands for limited liability. Whose limited liability? It's the shareholders' liability. So what we become, Donnie, is you and I become shareholders, and creating this limited company creates what we call a bail of incorporation. Now, lawyers get very excited when we say that because it's a very legal term.
Yeah.
But basically, the veil of incorporation separates the owners from the business. So, for example, it means that we are limited to the extent of our investment in this business. Right. Now, if we think about an example here, so let's say you invested $10,000 into Thomas Cook a few years ago, Donnie. When Thomas Cook went bust, you'd have lost your $10,000 investment. What you wouldn't have had, though, is somebody who's phoning you up going, I'm the landlord of Woolworths, of Thomas Cook. Thomas Cook has gone bust. Thomas Cook owes me $1 million in rent. You own Thomas Cook, and therefore you owe me $1 million in rent. Okay, so we are limited to the extent of our investment. Right. Now, this is really important. Okay, this is a fundamental basis of capitalism. This concept, to my knowledge, exists in the whole, you know, in every country around the world. because the world as we know it today, Donnie, wouldn't exist if we didn't have this concept. So you would not buy a share in, for example, Facebook, if you knew that not only could Facebook go bust and you lose your investment, but then the creditors of Facebook chase you for everything you own, all of your furniture. Not that your furniture is worth very much, Donnie. I can see it in the background there, but you know, etc., etc. Okay, so we are limited to the extent of our investment, and this kind of gives me and you as the shareholders a bit of security. They're not going to take my house, they're not going to take my car, they're not going to take my kids. Donnie,
Yeah.
they can have my kids, but they can't have anything else. Okay. So this becomes a separate legal entity. And we need somebody who's going to run our separate legal entity. We're going to need somebody who's going to run the company. What do we call the people, Donnie, who run the company?
The directors.
Absolutely, the directors. So what we do is that Ted and Donnie, as the owners, appoint Ted and Donnie as the directors to run the trading company limited on behalf of Ted and Donnie, the owners. Okay.
Yeah.
And as we start trading, we're very successful because obviously you and I be very, very successful. Our company grows. And as it grows, we start to bring in some more directors to help us run the business. And after a while, Donnie, it's so successful that you and I retire to our exotic island somewhere in the Caribbean. So
Yeah.
now we have the owners and the directors are separate.
Yeah.
How do we as the owners know how the directors are doing in performing in terms of running our business? How do we know if they're doing a good job or a bad job?
They need to report to us.
Absolutely. So every year, the directors have to prepare the statutory accounts. Statute, they're required by law. It's a legal requirement. So every limited company must prepare these statutory accounts and send them to the owners. Now, here in the UK, Donnie, they're publicly available. All you got to do is go to companieshouse.co.uk, and you can see the statutory accounts of any company, your companies and my companies. Okay, so the directors prepare the statutory accounts. This is the income statement, the balance sheet, the cash flow, any other information that they have to prepare. And if they're doing a very good job, Donnie, then the document will say they're doing a very good job. Can they have a big bonus? And if they're doing a rubbish job, then the document will say they're doing a very good job. Can they have a big bonus? So how do you and I, as the shareholders, know whether they're doing a good job? How do we know if the numbers are correct?
I don't know, Ted. It's a good question.
Okay, we get them audited. We appoint
Right.
an independent auditor. So
Right.
here's my auditor appointed by the shareholders. So the shareholders appoint an independent auditor to check the numbers prepared by the directors.
Right.
Okay. Now you're sitting there thinking, hold on a sec, Ted, I don't have an auditor to check my numbers. Well, you don't, Donnie, because you're the director and you're the owner. There's no point getting an independent auditor to check the numbers that you prepare for yourself. Duh,
Right.
that'd be crazy.
Right.
Okay. So there are limitations. If you're a small company, if you're under a certain ceiling, you don't need an auditor. But once you
Right.
get to a certain size, it's quite big, Donnie, but once you get to a certain size, you legally, certainly here in the UK, you legally have to have an independent auditor to check those numbers.
Right.
Don't forget, there's going to be other people who are interested in those numbers. Your suppliers, your customers, your banks, for example, your employees, other people are interested to make
Your
sure
investors.
that those numbers are correct.
Right. So people who are investing
Exactly.
in the company as well.
Well, stakeholders.
Yep.
Well, those are the shareholders. So the investors are the shareholders, but you've got other stakeholders, lenders, suppliers, customers, employees, the local community, etc., the taxman, etc., etc. Okay. Now I'm just going to touch here and just talk a little bit about the directors. We're going to talk about directors in greater detail in a separate section. But sometimes you hear this difference between an executive and a non-executive director. Do you know what the role is between an executive and a non-executive director, Donnie?
So a non-executive director is not liable for making decisions in the company itself, correct? Or am I wrong?
Yeah, that's a good guess, actually, but no, it's not correct. So as a director, you have specific statutory and legal responsibilities, okay? And again, we're going to talk about those in a little bit more detail. So whether you're an executive or non-executive, you are a director. And as soon as you are named as a director, you have to fulfill certain obligations. However, the difference between the executive and the non-executives, together they form the board of directors. They formulate the strategy of the organization. The executive then go and execute that strategy. So they are typically day-to-day employees of the company. They have day-to-day responsibility for running the business. The non-executive, they hold the executive to account. Okay, so if you're a shareholder in BP, you do not have right of access to the boardroom of BP. You depend on the non-executive of BP, that's the chairman and the non-executives directors, to hold Bernard Looney, who is the CEO, to account to make sure he runs BP in your best interests, not in the best interests of the suppliers, the customers, the staff, the board, etc., etc. Okay, so the non-exec. So when we're thinking about this, for your business, you won't have a non-executive director because you don't need to appoint somebody else to hold you to account for yourself, if that makes sense.
Yeah.
But if you have a separate investor, that separate investor might take on that non-executive role. So we'll talk about that in a little bit more detail a little bit later on, as I mentioned. Okay. So there we've got a kind of, so the key points of our limited company. So let's just summarize some of the key points, a checklist here. The company is a separate legal entity. Okay, it's as a separate legal entity. It's got to have a unique name that must be registered when you actually register the company. And it's very cheap to register a company. You can do it for about, I don't know, 30 quid. I think I did it last time using companywizard.co.uk. So when you register a company, you've got to give it a unique name. It mustn't be blasphemous or offensive, and it can't be something like Coca-Cola or Facebook because they've already taken and they'll come after you, Donnie. You have to issue at least one share. Okay, so you have to have at least one share at issue, and that share has to have a value. So it could be 1p, one share for 1p. It could be 10 shares for $10 each. It could be 1 million shares at $1 million each. You've got liquidity problems if you do that, though.
Yeah.
So you have to have at least one share, and that share has to be owned by someone. Okay, so either you or me. We need to appoint a director. So you have to have at least one person who's in charge of your company. And this keeps you and your business separate. Okay, so this is a really nice way, Donnie, of saying, look, I've either got my business hat on, I'm buying and selling, this is a business expense, or it's me. Okay, and I'm buying for heating for my house, I'm filling up my car for my own personal use. So you're starting to try and keep these two separate. It also limits your own personal liability, as we talked about. So as a sole trader, you potentially, and this is why the business insurance is so important, you potentially have unlimited liability. So if you're sued for something and it's not covered by your business insurance, you're personally on the hook. Okay, whereas here they can't sue you or me, they can only sue the company that they're trading with. Now, the problem with being a limited company is you do have additional filing requirements. So it's a little bit more, you have to provide an annual return each year. Very easy to do, takes me 5 minutes and it costs £13 here in the UK, but you do have to do it. And you also have to file your company accounts and calculate your corporation tax. Now, again, it's relatively easy, but most people think, oh, it's finance, I'll get my accountant to do it. I bet you get your accountant to do it, Donnie.
I do.
And I bet he charges you quite a lot of money to do it. Exactly.
They
So
do.
you get your accountant to do it. Your accountant charges you quite a lot of money, and you kind of think, I'm paying whatever it is, £1,000 a year, and I'm suddenly thinking, that's £1,000 that I don't have for what is actually quite straightforward. I do all my own filing because I know about that stuff. Okay. So that's kind of it in a nutshell for a limited liability company. And any questions on anything we've talked about so far, Donnie?
Yeah, I think with regard to the limited liability company, I guess as you're starting off, it sounds like the limited liability company is a lot of work, right? There's obviously some protection that it gives you as a
No, it's
personal
not.
level.
It's not a lot of work. It's a little bit more work, but it's more burden. Okay, it says that you can't miss an annual return or you'll get a fine. You can't just not file your company accounts or you will get a fine. But then, if you're a sole trader, you've still got to record. You've got to record your sales and your costs because you've got to declare your profit to HMRC. So either side, you've got a financial administrative burden. And there's no getting away from that.
Yeah, and I guess again,
but
if we look at, sorry.
Go on.
I was just going to say, like,
What do you say?
When you're getting, if you look at from a startup perspective and startups these days, the limited liability company seems like it could be the best option to start off with, because you want to make sure that
as I said. Yeah, as I said, it depends on kind of how you want to structure it. So if you're just dipping your toe in the market, if you're thinking, you know, I made a pot of jam and somebody said, oh, I really like your jam, Donnie, why don't you make a few more and see if you can sell them? Then sole trader's the way to go.
Yeah.
But if you and I sit down and say, come on, Ted, I'm going to develop this piece of software. We're going to take over the world. Let's get 3 or 4 people involved and really make a go of this, then you're absolutely right. To start off, we'd set up a limited company, we'd work out the shareholdings, we'd work out the responsibilities, we kind of work out how we're gonna run this company.
Okay. Great. So that makes sense.
So a couple of other things, and again, we're going to talk about these in a little bit more detail later on in another module. But the point we've done with our limited company is we've got a separation between the shareholders and the directors. Okay, so you're a director of your company, Donnie, and you're a shareholder, but you have different requirements, and sometimes you have to put your shareholders hat on, sometimes you have to put your director's hat on. You can have people who are like shadow directors. They're not formally called directors, but they act as directors. And if they act like a director, then they're treated like a director in the eyes of the law. Again, we'll come on to that. And there are additional legal responsibilities of directors in responsibility to that company. So you're an employee, but you're an employee plus effectively. One of the things you might want, in fact, I would highly recommend you do, is that if you have more than one shareholder in your company, you get a shareholders agreement. Because Donnie, if you and I enter into you know, we set up a company together, 50-50, for example, and then you suddenly lose interest and go off, and I'm still working for this company, I'm going, hold on a second, I'm creating all the value and you've left, yet you still owe 50%. Donnie, you ever seen a Social Network?
Yes.
You must have watched the social. Yeah, absolutely. Do you remember where the finance guy gets diluted out? One day he turns up at the office and he's been told that his holding is now 0.3% or something. You know, 0.03%. You know, what a muggins there. Get a shareholders agreement, and you need something like this that covers all eventualities. Donnie, what happens if you die? What happens to your shares? Do you give them to your wife? Do I get to buy them back from you? Do I get a priority? Do you give them to your daughter, who then just owns 50% as a sleeping partner, etc., etc.? So it solves it. Quite often, people fall out with each other as companies grow. Having a shareholders agreement is like a prenup in a marriage. Okay, it's a really, really important. So that's really important. As a director, you want to think about, do I take my money out as a salary or a dividend? Okay, that's something we'll talk about a little bit later on. You can think about directors' loans. You might be asked for personal guarantees. Again, that's a topic we're going to talk about a little bit later on. You've got to keep books and records, and keep them for at least 6 years. In fact, I think you've got to keep them for 20 years in cases of fraud. But you've got to keep those books and records. You've got to keep accurate books and records. So it's no longer keeping all your receipts in a shoebox. You need to make sure that they are accurate and that they are, you know, they reflect the nature of the business. You're effectively, as a director, you're working for a separate legal entity. As we talked about before, you've got to file your accounts at Companies House. You've got to make your corporation tax return. You've also got to create an annual return. Having a separate company also allows you to park your profits in the business. So if you're in a business where you're going to make lots of money in 1 year and then very little money in the next year, by parking it in the business, you can drip feed it out and you can kind of manage your own personal finances a lot more easily. Whereas if you're self-employed, if you make a profit, you make a profit and you get taxed on that profit. So if you're self-employed and you make nothing for 3 years and then £1 million and then nothing for 3 years, you're going to get taxed at the high rate on that £1 million. Whereas if you have a company, you can park that £1 million and drip feed it out and kind of, you know, manage exactly. Okay. So those are some additional things to think about when setting up a limited company. As I said, lots of those we're going to cover in a little bit more detail in one of the next workshops that we do together. Any questions?
No, I think all that was very helpful. I think it's really important for people who are going to start their journey of entrepreneurship to really understand which model they're going to go after. When I started my business, I jumped straight in and I created a limited company because I thought that was a way to go. In hindsight, it probably would have been better to try it out with the sole trader, because it was a
Absolutely.
consulting business, and then move into limited liability, a limited company. Once I was a little bit more in tune with things, because one of the things that you touched on before, and something that we will talk about later on, is the fact that when you're starting a business and you've come from a non-finance background, so say you're an engineer or web developer, and you just started your business, you treat the business like you're still a consultant, or it's your personal piggy bank, basically. Even though you are a company and you don't really understand the difference between the company and you as a director within the company, or as an employee within the company. So I think this was a really good overview of that, to understand that there's
I'll
this
just,
clear separation.
I'll reiterate that, Donnie, and we're obviously talking now. It's January 2021. We're kind of, we're back in another lockdown with COVID-19, and lots of people have been furloughed, and there'll be lots of people who actually lost their jobs, and they may be looking at this thinking, so I'm gonna try this. So again, if you're a sole trader and you're kind of making jam or acting as a consultant, and then you get a job offer, you can actually just bin the jam making and go straight into the job, and it doesn't make any difference. If you set up a legal company, you still have to file those tax returns, you still have to file the the annual returns. You created something which creates this kind of burden until you close it down.
Yeah.
One thing I didn't mention here is, with a limited company, you're going to need a bank account. So you're actually going to need to set up a business bank account. Typically, you're going to have to pay for that business bank account. You can get them free. I know here in the UK, you can get a free business bank account from Metro, for example, but you've got to have £5,000 in the bank to start with. So again, there's quite a lot of administrative, and then you just got to keep it ticking on. So you don't have to trade through the account, but you still have to, you have filing commitments that you have to actually do. And if you don't, you end up getting fined. So, as a director, you have these responsibilities. So I would suggest that if you're sitting there and you're just trying something, you're just seeing if it works, whether it's flowers, making jam, acting as a consultant, then start off as a sole trader. Once you say, yes, this is what I want to do, that's the time to incorporate. If, on the other hand, you've been sitting there and you've got a group of people together, and it works better for a group, and you've got a group of people together and say, look, we need to kind of, we're gonna spend time developing this piece of software and taking it to market, or whatever it is, then you might want to incorporate the business in order to tackle that specific challenge.
Yeah, great. One thing that I think we will do in the comments, in the comment section, or the notes for the video, I'll put some resourcing in there. So there's a few tools that you can use. So if you're just starting off, you can use something like Crunch Accounting, which is an online accounting, and they're not as expensive as going directly to a dedicated accountant, and things like Seed Legals, which helps you do those shareholders agreements and things like that. So there's a few tools out there that are really helpful. I will put links to them in the description of the video.
Excellent. Well, that's going to be really useful. Well, Donnie, thanks a lot for your questions and inquiries. So I put up a final slide. Tell me about Six Berries.
Well, first of all, I'd like to say thank you very much, Ted, for taking time. So Six Berries helps early stage startups and non-technical founders with their technology. So if you have an idea for something but you don't know how to build it, or you need some technology built, we come in and we become your technical co-founder and help you through understanding all the technology and helping you get it built. So the same way that you would come in as my hero for finance, we come in as your heroes for technology.
Excellent. Okay, so well, thanks a lot, Donnie. It's been great to talk to you.
And do you want to tell us a little bit about Talk Financials, Ted?
Yeah, Talk Financials. So we're here to help improve the financial fluency of the world. So if you got any questions about any finance, any sort of aspects, whether it's accounting, whether it's raising finance, structure, anything like that, then please get in touch, and we are willing to help. Financial consultancy.
Great. So thanks very much, Ted. And we are looking for submissions. So anybody who's watching this video, if it is that you have financial questions, please add them to the comments, and we will, be happy to get those answered in a subsequent video. So thanks very much, everyone.
Excellent.